Hello everyone. In this video, let's have a discussion on steps in preparation of fund flow statement, which is fourth chapter, fund flow statement and cash flow analysis, fund flow statement analysis and cash flow statement analysis of sixth semester BCom BBA Management Accounting. I am Madhu Chetan. The procedure involves the three steps. In first step, we have to prepare a statement of changes in working capital, and the second one, fund from operation statement, and that means adjusted profit and loss account. Here we have to prepare where to find out the fund from operation is to find out the funds from operations, and then fund flow statement. Fund flow statement is a method by which we study changes in the financial position of a business enterprise between beginning and ending financial statement dates. So the funds flow statement is prepared by comparing two balance sheets and with the help of such other information derived from the accounts as may be needed. So broadly speaking, the preparation of fund flow statement consists of three parts. That is, as I told you before, statement of in first step, statement of changes in working capital, in second part, funds from operations, and then last part, fund flow statement. The statement or schedule of changes in working capital, which is prepared in first step. So working capital means the excess of current assets over current liabilities. Statement of changes in working capital is prepared to show the changes in the working capital between the two balance sheet dates. So this statement is prepared with the help of current assets and current liabilities derived from the two balance sheets. As we all know that working capital equals current assets minus current liabilities. So an increase in current assets increases the working capital. Increase in current assets increases the working capital. The decrease in current assets decreases the working capital. The decrease in current assets decreases the working capital. An increase in current liabilities. An increase in current liabilities decreases the working capital. An increase in current liabilities decreases the working capital. A decrease in current liabilities. A decrease in current liabilities increases the working capital. So these are the four rules we should understand. So I repeat, an increase in current assets increases the working capital. The decrease in current assets decreases the working capital. So here it is ulta. An increase in current liabilities decreases the working capital. A decrease in current liabilities increases the working capital. So the total increase and the total decrease are compared, and the difference shows the net increase or net decrease in working capital. It is worth nothing that schedule of changes in working capital is prepared only from current assets and current liabilities. The net increase in working capital represents the application of funds, and the decrease in working capital represents the sources of fund. So the statement of changes in working capital, the statement of changes in working capital, also termed as statement of changes in The statement of changes in working capital is also termed as schedule of changes in working capital. So here on the screen we have a specimen form of schedule of changes working capital. This is how the schedule of the schedule of changes in working capital can be prepared. So current assets first. So there will be 5 columns. In first column particulars, second column previous year amount in rupees, third column current year's rupees, and in fourth and fifth column the effect on working capital will be recorded. If there is an increase in amount, it will be recorded, and if there is a decrease in the amount, it will be recorded. So total current assets will be taken and it will be deducted from the current year's amount will be deducted from the previous year's amount, and if there is an increase, then it will be written in increase column the current assets. I'm talking about the current assets. And if there is a decrease in current assets, then amount will be written in decrease column. Whereas in current liabilities it is ulta. If there is an increase, the amount will be written amount will be written in decrease column. If there is an decrease, the amount will be written in increase column. So this is what I told you, the 4 rules to prepare the schedule of changes in working capital. So later the differences will be added and the balancing figure will be found out. With that balancing figure we will find out whether there is a net increase in working capital or decrease in working capital. Moving to the next part, that is preparation of fund flow statement. So fund from operation is to be determined on the basis of profit and loss account. The operating profit, the operating profit revealed by profit and loss account represents the excess of sales revenue over cost of goods sold. It does not reflect the exact flow of funds caused by business operations because the revenue earned and expenses incurred are not in conformity with the flow of funds. For example, depreciation charges on fixed assets, write-up of fixed assets or fictitious assets, any appropriations, etc., do not cause actual flow of funds because they have already been charged to such profits. Hence, fund from operation is prepared to find out exact inflow or outflow of funds from the regular operations on the basis of items which have readjusted to the current profit or loss. The balancing amount of adjusted profit and loss account describes as fund from operations. So the specimen of adjusted profit and loss account is on the screen. At the debit side, we will take depreciation on fixed assets, loss on sale of fixed assets, loss on sale of investments, goodwill written off, discount on shares written off, transfer to reserve, preliminary expenses written off, provision for tax, proposed dividend, and the closing balance of P&L account. And the other side, means credit side, the opening balance of P&L account, profit on sale of fixed assets, excess provision return back, then dividend received on investments, revenue of fixed assets by fund from operations. If there is a balancing figure, if we find a balancing figure at credit side, that balance is considered as fund from operations. If there is a balance at debit side, that is termed as fund lost from operation. Now moving to the fund from operation. To find out, now moving to fund flow statement. So in the analysis and interpretation of financial statements, fund flow statement is one of the important techniques. The statement of changes in working capital is prepared with the help of current assets and current liabilities. Similarly, fund from operation is prepared on the basis of profit and loss account to find out the exact movement of funds in different operations. After preparing schedule of changes in working capital and fund flow statement, funds in different operations, at the last stage, a comprehensive fund flow statement can be prepared on the basis of component of non-current assets, non-current liabilities of balance sheet and relevant information. In other words, this statement is prepared with the help of the changes in non-current assets and non-current liabilities. So this statement is prepared with the help of the changes in non-current assets and non-current liabilities of balance sheet. The components of sources and application of funds are issue of equity share capital, issue of issue of preference share capital, issue of debentures and bonds, long-term loans raised from bank, finance institutions and public, long-term loans on mortgage, sale of fixed assets, sale of long-term investments, non-trading incomes, fund from operations, net decrease in working capital, and the generated funds from various sources may be utilized like redemption of shares and debentures, repayment of loans raised from bank, financial institutions and public, purchase of fixed assets, purchase of long-term investments, non-trading expenditure, payment of tax, payment of dividend, fund lost from operations, net increase in working capital. They are all the applications of fund. So we divide the columns as sources of funds and applications of funds. At the sources of fund from operation, issue of share capital, issue of debenture, loans, then sale of fixed assets, sale of investments, non-trading incomes, decrease in working capital is taken. Then at the application side, fund lost in operation, redemption of shares, redemption of debentures, purchase of fixed assets, repayment of long-term loans, non-trading expenditures, payment of tax, payment of dividend, increase in working capital are taken. At the end, both the source side and application side should tally. So if both the figures, the total of source and total of applications are same, so the problem will be treated as it is a correct problem. So at the end, source side and application side both the total should tally. So this is how statement fund flow statement is prepared. So at the first stage we have to prepare a schedule of changes in working capital. In second stage we have to prepare adjusted profit and loss account to find out fund from operation. At the last stage we will prepare fund flow statement. So the fund flow statement should tally at the both the sides. So with this I end this video. Thank you very much.